This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Inflationary pressures show signs of easing in today's data releases, in the shadow of yesterday's highish US CPI release, and there is some talk of rate cuts elsewhere. First up in the US, the number of new jobless claims fell last week, consigning the prior week's jump to the anomaly basket. There are now 1.9 million people on these benefits, virtually unchanged from the prior week level. And the rise in American producer prices was also less than expected in March, coming in at just 2.1% higher than a year ago. A year ago, they were rising at 2.7% rate. Producer price rises are not a major factor in their consumer price inflation. And the USDA lowered its price estimates for most of the key agricultural commodities they follow, especially grains, as good harvests worldwide more than covered global food demand. Global food prices were already running at 3-year lows. Specifically, the Americans are expected to import more beef and produce less milk. And China's consumer prices edged up a mere 0.1% in March from a year ago, much less than market forecasts of a 0.4% rise, and after an annual 0.7% rise in February. The extended flirting with deflation is dangerous and highlights the economic challenges they face. Demand is actually quite weak, and all this data comes from the officially approved series. Meanwhile, China's producer prices shrank by 2.8% in March from the same month a year ago. This was the expected drop and compares with February's drop of 2.7%. It was the 18th straight month of contraction in factory gate prices and the steepest decrease since November, highlighting the persistence of deflationary forces in their economy. In Japan, a lack of intervention in support of the yen after it weakened beyond 152 to the US dollar for the first time since 1990 has financial markets wondering when or even if the Japanese authorities will step in, as has been widely expected. There are now many market bets that this will have happened by now. But perhaps Tokyo senses it is more about the rising US dollar rather than a weak yen. It certainly isn't that weak against most other currencies. And the ECB held its policy rate at record high levels for a fifth consecutive time during its April meeting overnight at 4.5%, a 22-year high. However, they did signal that a rate cut could come soon, perhaps in June. And last week, global container shipping rates eased only marginally, staying 64% higher than year-ago levels. Bulk cargo rates, however, fell 7.5% in the week and are now back to long-run averages. And the US Treasury 10-year yield is now at 4.57%, and up a minor 1 basis point from yesterday as things settle in at new higher levels. And the price of gold will start today up $20 at $2,355 an ounce. Oil prices have fallen $1 to just on $84.50 a barrel in the US, while the international Brent price is down a bit less at $89 a barrel. And the Kiwi dollar starts today at just over 59.9 US cents, and little change from yesterday. Against the Aussie were softer though at 91.7 Australian cents. Against the euro were firmer at 55.9 euro cents. That all means our trade-weighted index starts today at just on 69.4 and up a minor net 10 basis points. And the Bitcoin price starts today firmer at $70,258 and up 1.3% from yesterday. Volatility over the past 24 hours has been modest though, at just on plus or minus 1.6%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.